Hi everyone. In this video, I want to talk about finding a financial advisor. If you're a do-it-yourself investor, you really should find a financial advisor for a check-in before you retire. But where do you look? Most advisors are not fiduciaries and have no requirement to have your best interest at heart, and instead have their best interest in mind. This often means they are looking to extract as much in fees and commissions out of you as possible. In practice, this often looks like high commission products like loan mutual funds. In loan mutual funds, you often pay 4 to 6% of your investment upfront when you purchase the fund, in addition to high annual management fees. Another way they will extract fees and commissions out of you is with high annual management fees. If you're paying well above 1%, 2%, on an annual basis in management fees for your advisor to manage your money, you're paying quite a bit. So how do you get around that? Do your research. Not all firms are created equal. Some popular names that tend to have high fees are Edward Jones, the big banks, and any of the full service Wall Street firms. Before we continue, I wanted to take a quick moment and ask for a favor. This is a brand new YouTube channel, and I would love it if you would take a moment to like and or subscribe to this channel. Thanks. Now, 401ks are a little bit of a different category. Oftentimes you go to work for your employer and you don't have a choice over the 401k. If we're lucky, we have access to a 401k that's administered by a Fidelity, a Vanguard, a Charles Schwab, but that's not the case for all of us, especially when you work for smaller employers, right? But 401ks, at some point, you leave your job, you go to a new job, and then you have flexibility in, do you leave the money in there in the 401k, or do you roll it over to an IRA that you have more control over and may have much lower fees? So there are certain 401ks that you want to keep an eye out to, and once you've left a job, move the money to a low-cost solution. John Hancock, for one, is well known for having high fees, as well as any of the 401ks administered by insurance companies. So keep an eye out for that. And it's not as simple as just looking at your expense ratio on the mutual fund investments that you choose within the 401k, although that is the first sign. You can take a look at those expense ratios and they tend to be high, but there's also other plan fees that you have to dig deeper or ask for a copy of the plan details to be able to understand fully what the costs are. Well, I'm calling out some of the gotchas that you should look out for. These companies are not inherently bad. They may provide a great service. They may provide an advisor that you like very much, but it's just something to be called out because study after study has shown that paying high fees will directly relate to a much, much lower balance in your retirement funds as you head into retirement. So something to be aware of. And if you're choosing to pay the high fees, then want to make sure that you're getting the service that you expect and understand the downfall that it will impact what retirement balance you grow to. So where do you look to find an advisor who can help provide a check-in for you if you're a do-it-yourself investor? For do-it-yourself investors, the best solution is to find a fee-only financial advisor. So rather than paying a percentage of your investments on an annual basis to manage your money, this is an advisor who you're paying for their time. So you're paying them for a check-in and maybe a couple hours, and they're going to give you advice, but they're not selling you any product. So this is very different than an advisor that's not charging for their time, but they're making money based on what investments they sell you. And so obviously they're motivated from their side and from their firm side to sell you products that have higher commissions and might not be in your best interest. A great place to start your search to find a fee-only advisor is the Garrett Planning Network. This was an organization that was set up to find fee-only financial advisors. And so advisors that are in their network are fee-only financial advisors. Certainly there's other places you can look, but that's a good starting point to see what's out there. If you want an advisor you can go and see in person, then you can look for your area and then you go from there, right? Ideally, you should pick 2 or 3 or 4, and then you can interview them and find out which one works with your style best, which one you want to work with. And again, like you could go for a one-time visit, or you could do a checkup, once a year, or maybe you're doing a checkup a couple of years out of retirement. It's really up to you, but certainly highly recommended that you check in at some point. Even if you're a fairly sophisticated investor, I think getting a second opinion is very helpful. And remember, a good financial advisor should be asking you a lot more questions than what is your balance and what investments do you have or do you want. There should be questions around your goals, your lifestyle, your cash flow, what you expect to spend in retirement, all those things, how you're going to cover health insurance, right? So there's a lot of detailed questions that you can kind of sift out the quality of the advisor by kind of what all they're looking out for in the conversation that you have with them. So I'd love to hear what you think. Let me know in the comments your thoughts. Have you ever worked with a fee-only financial advisor? Do you have a full-service financial advisor? Or how do you manage your retirement funds? Or maybe you're already in retirement. And if you would, take a moment, please. Would greatly appreciate it as a new channel if you would click that like button or consider subscribing. Thanks, and we'll see you soon.